Welcome to The Trade. Well, the conflict in the Middle East has widened, with Israel attacking Lebanon in response to strikes by Hezbollah, while Iran has continued to launch airstrikes on Gulf states. The US military says it's hit more than 1,200 targets in Iran since operations began on Saturday, and it's destroyed 11 Iranian ships. President Trump has said the war could continue for some weeks.
We will easily prevail. We're already substantially ahead of our time projections, but whatever the time is, it's okay. Whatever it takes, we will always, and we have right from the beginning, we projected 4 to 5 weeks, but we have capability to go far longer than that. We'll do it.
Well, the conflict has caused chaos for global air transport and has shut down shipping through the Strait of Hormuz, where 1/5 of the world's oil transits. US Treasury yields have climbed as surging oil and gas prices raise fears about escalating inflation. The US 2-year yield rising to 3.49%, the 10-year at 4.06%. Australian 3-year government bond yields are up to 4.29%, the 10-year at 4.75%. And the US dollar index was up around 1% on the day of the Aussie, currently trading at 71 US cents. Let's now turn to the technicals, and to do that we are joined by Peter McGuire from Transcom. Pete, welcome back to you. As we watch those market moves, obviously in response to the conflict we're seeing in the Middle East at the moment, and investors asking the question of just how long this is going to last for. What are you watching at the moment, particularly technically?
Well, good morning, Andrew. I think certainly keeping an eye technically on the US dollar index, how you run it across all the commodities, of course, with gold and the oil markets. And I'm just curious to see where this US dollar trends in the short term, because there just seems to be a fair bit of momentum in at the moment. It's, that safe haven suit, if it broke above 98, which it did it with conviction. It's now trading at 98.55, and it opened with a really positive, zoom to the upside. So I'm expecting there to be even further push, probably around that 99 sort of handle, and we might even take 99.25 out if the bulls are willing to stop there. I'm thinking they might be a little bit more confident driving the battle towards the peak of November 21 at around 100.3, Andrew. So that's the sort of theme, and I feel as though it's very much on the upside. I don't really want to talk too much about the downside, because I can't see the US dollar coming under pressure in the short to medium term.
Now, of course, we have seen that flight to safety. That certainly applies to those safe haven currencies, in particular the Swiss franc. What are you seeing there at the moment?
Well, Swiss franc as well. I mean, that was gold backed, and of course they've had a nice little rally to the upside as well against that US dollar index. So where we're looking as far as those gold backed currencies, there's plenty of upside. You really, I think one's very mindful where it is in the short to medium term, and you may see even further pressure. As far as the US dollar's concerned, I'm feeling as though that's Euro Swiss franc just there. That Swiss franc will probably come a little bit further to the downside as far as pressure against the euro, and I'm feeling relatively confident that you may see a little bit of a rebound, as it mentions there, around that 90.22. That's what more or less the market's telling us, and it's be interesting to see how it wears through over the next couple of days.
Let's now take a look at the US 500 index. What is this telling you?
Well, you had a nice close, Andrew. When it was up, it closed at around about, what's it on the screen? I've got my chart there, 68.81. What was interesting was that it had a low, traded as low as 67.96 and closed at and a high of 69.01 with a close of 68.81. If the US stocks managed to gain some lost ground, then I think the US index will probably initially try to exceed the 100-day simple moving average, and that's 68.23. So further up, it might face strong resistance around that 68.80 to 69.10 sort of handle, which is technically quite busy with the 20 and 50-day simple moving average and the key ascending trend lines drawn from June of 2025. So the overall momentum, Andrew, is going to be, I think, resistance around 69.10, but let's just work through this, because there's a lot of this. These are very unusual times when you're talking about war and the impact it has naturally to market sentiment, and of course bond rates, and is it risk on or risk off?
Let's look at, let's drill down a little further, and I think you've got the US 30 there.
Yeah, US 30, very interesting at the moment as well. You know, the market 48,904. That's where the Dow ended. It was down 0.15%. I'm feeling as though that you'll probably see the market move maybe around that 68 handle. It's going to see, 68, 48, 50 handle. And then I feel as though you're probably going to see a little bit further upside around that mid 49,000. There could be a resistance there. And again, we've got to work through that because, again, quite simply, geopolitical impact and whether it's going to take the other broader markets, being the S&P 500 and the NASDAQ, up as well. So we're working through that. I think it's fairly choppy. Good for trading because there's plenty of movement, and certainly not for the faint-hearted, but there's a dollar to be made in these markets at the moment.
All right.
Just don't get greedy.
What about in Europe? What are you seeing there? The German 40?
German market's very interesting in itself, Andrew. It's come under a fair bit of movement at the moment. It seems to be trending a little bit lower, that German 40. You know, the overall theme, I think, is going to be a little bit further softness, but it's above those, as it shows there, above those 50 and 200-day moving averages. Where it rolls, I'm feeling possibly it might retrace some of that move up to the upside. It's had a fairly tight band of trading over the last matter of months, and I feel as though that'll probably continue. So I'm not expecting any great movement to the upside or the downside. It'll remain in that constant channel, I feel.
All right, and let's turn to crypto. Now, Bitcoin rebounded overnight, but let's take a look at Ethereum, what you're seeing there at the moment.
Well, it's a bit. First off, I'll answer the Bitcoin one. Bitcoin 68,863. Ethereum has certainly been under a fair bit of pressure, and it's running that, as it shows on the chart there, that 21 sort of and 2000 sort of handle. It's probably, I would think, with the likes of XRP also, a continual downdraft at the moment over the next matter of days because of volatility across naturally the broader markets with the war impact as far as sentiment. So continue to see, you know, thin range of trading, and I feel as though that channel will continue in the short to medium term. It's under all of those moving averages it shows. So again, I think it'll find support around this sort of number where we are at the moment, and it'll remain fairly range bound.
Pete, great to get across the technicals. Thanks for joining us from trading.com.
Thank you, Andrew.
And that is The Trade.